Okay, so we have final presentation in this session. James from Elliptic.
Hi. So at Elliptic, we're trying to start building the infrastructure that's required for digital assets to start being used on a global scale. We come from a background with a bit of technical expertise, but also a bit of experience of the existing financial system. So two of us worked in derivatives trading for a few years, and the other guys sort of started up his own company before. So the problem that we initially tried to address was, while these things are great, it's quite easy to steal them or to lose them and all sorts of other things. And so most of you have probably heard of Mt. Gox, where lots of money went missing and people didn't know where it was. They didn't know how it was being stored. There was also another example where someone threw away his hard drive and he had all his Bitcoin stored on that and lost £5 million or something. And so there seems to be a real lack of basic infrastructure that is required in order for people to be able to use this new kind of technology effectively. So in January, we launched our first product, which is called Elliptic Vault, which is secure storage as a service. And we see ourselves as a custodian that we hope we're trying to build a sort of a brand of trust based on having the expertise to store things correctly. We have expertise in security, so we'll take the security to a level that your average user won't. And then to sort of stand behind all of that, we also have insurance policies which cover us, even if the Bitcoins or whatever other asset was stolen, then the insurance pays out. And an area that we think that this is already better than banking in normal currencies is that because it's a blockchain-based technology, we can show our customers exactly where their money is and that we do still have it and it's controlled. And one of the problems with Mt. Gox was that people didn't know if the money was really there, and when they came to take it, it was gone already. Whereas everyone can see with our service that it's still there. The storage, for those of you who don't know the sort of intricacies of Bitcoin, is called deep cold storage. A Bitcoin address is sort of it's akin to how you have an email address and a password. You've got the public part of it, which you can give out to anyone, and they can send money to that public address. But you can't send emails from that account, or you can't send money from your Bitcoin address without having the private part. So what we're actually storing when we're storing a digital asset is storing that private key or the password. And we store that very securely with lots of layers of encryption in physically secure locations with multiple physically secure, geographically distributed backups and so on. And we give a customer the public part so that they can deposit there easily. So we're still in early days, obviously. We launched our service in January, and we're focused in the near term on building out that storage. For anything that we've talked about today to take off, there needs to be the sort of basic plumbing infrastructure there so that people can use it and can trust it and so on. So storage is our current focus, and we see that moving then into transactional services. It's sort of clearing and settlement of trades and that sort of thing. And also a lot of the other sort of boring stuff like reporting and making sure tax is reported and that sort of thing. So in some sense, what we're doing is not the great blue skies ideas we've been talking about today. We're just trying to put in the infrastructure so that people can build those things in the future. Some of the areas we're interested in, and we do see great disruptive potential are here. Smart property, which has been talked about a bit today, whether that's storing your house on a blockchain or your equity portfolio, and then the company can pay you directly rather than having to go through a chain of custodians and brokers and so on. Smart contracts, which I guess haven't been discussed in a lot of detail today, at least where I've been, but you can really sort of program money using blockchain technologies. So you can create very complex contracts where it makes it easy to lend or borrow any asset, or to have a transaction that can only be signed by multiple people, or there's all sorts of sort of crazy things you can take this to, but you can basically write any very detailed contract you want very cheaply and easily, and you don't need to go and set up all sorts of legal infrastructure to do it. It's all built into the blockchain. I think one of the current great things about Bitcoin, but also, as we go forward with all sorts of technologies like this, is that it makes it a much more competitive marketplace. So the biggest sort of proper use case at the moment of Bitcoin is people paying a merchant in Bitcoin for some service. And the reason that is immediately attractive is it's much cheaper to pay with Bitcoin than it is with Visa or MasterCard. Because Visa and MasterCard and people like them have a bit of a monopoly on the pipes that payment is going through. Whereas anyone who wants to start up their computer and start mining Bitcoin is essentially being one of those guys. And so it's a much more fair and competitive marketplace, just in that small area, but then as we go forward in all sorts of areas such as banking and storage like us, I mean, you could come and do the same thing if you wanted. And then one other potential area that we're looking at the moment is how it makes accounting and audit much more transparent. So if a large company gets audited at the moment, they get someone in to look through all of their books and make sure the money's been going in the right places and so on. But if all of that's recorded in the blockchain, that can be a much more automated process and lowers the cost of that whole area and the number of people required. So these are just kind of some of the things we're excited about going forward. Obviously, we're focused on the basic stuff at the moment, but we think there's a huge potential. The end.
Questions for James?
Hi, James. Thanks for that. It's very interesting. Obviously, one of the big problems at the government level is support of terrorism, money laundering. Now, I'm sure you've thought this through somewhere down, in your design of the business. What measures have you put in place to counteract that?
So for all of our customers, we do KYC checks, and we will only return the funds directly to the customer who gave them to us. We keep every customer's funds segregated from other customers. So when someone gives us a Bitcoin, we give them back exactly the same Bitcoin when they withdraw it. So in some regards, for us, the sort of KYC AML is quite simple. Because it's very hard to launder money through us because they're going to get back the same money. We've thought about this a lot more in terms of the clients we're working with. So we're talking to some currency exchanges, not digital currency exchanges, normal currency exchanges who are looking at getting Bitcoin in, but they're much more worried about it because there are people going to be coming onto their exchange and changing dollars into Bitcoins and back again. So it's an area that no one really has an answer to yet. People have suggested things like tracking who owned the Bitcoins before and who owned them before that and so on. The danger if you go down that route is that you start tainting money and saying, well, this is dirty money and that's clean money, and then it's no longer fungible. So it makes it worse as a currency. I don't think anyone has a good answer to this yet, and that's why that's why a lot of institutions are not getting involved yet. It's much more like cash than it is like money that's in a bank, and as you know, banks have very strong controls about what can be done with cash.
Thank you.
On that point, is a Bitcoin cleaned if it's sold by a US Marshal?
I think a lot of people would say yes, and they commanded a premium. I also think Bitcoins are cleaner in some sense if they've just been mined, and those Bitcoins sometimes command a premium.
Okay, we're just going to take another question here.
I'm a bit of a newcomer to the cryptocurrency ecosystem, and I come from the cybersecurity world. And I'm curious to hear more about what you guys are doing in terms of security, particularly because it seems to be one of your differentiators. And I'd be happy to hear how you are planning to mitigate the risks that other exchanges, hubs, and people that were storing Bitcoin had dealt with.
Yeah, so I won't go into all of the security details, but on a sort of higher level, we do what a lot of the good companies around now do, and what a lot of the ones who have had problems in the past don't do, and that's around where you generate private keys, how you store the private keys, how you duplicate them and make sure you have backups, but
Basically HSMs.
HSMs are great. It's also about how you use the procedures you have around where you keep those HSMs and what, how you use those
James,
HSMs, really.
What's an HSM?
Sorry, it's a hardware security module, which is very good for keeping private keys safe or data safe.
Is it one of those things that explodes if you open the top of it or something? Or no, is it? Is it?
It could do.
Yeah. It gets destroyed if you break it open. Is that right?
So the concept of hardware security modules has been used to store private keys securely, particularly in the e-banking sector and e-government sector, as far back as 10 years ago, especially when organizations deployed things called PKIs, public key infrastructures, where they had a public key, private key, and used that for digital signatures, encryption, and many other services. And then they'd have to keep the private key, particularly of the root server within the bank or the government, etc., extremely secure. So it would be physically secure within a bunker or a secure data haven, server farm, and then physically the hardware security model would have two different physical keys that two different people in the bank or the organization had to come there physically together and open it up together. And if anybody tried to break into the bank and physically take that private key out of the hardware security model, then it might explode.
Yeah.
But
So-
only if they got the expensive type.
The joke about exploding is when I was out at Citibank, we had some devices which, if you took the top off, would blow the chips inside. Is what I'm saying. So they're expensive ones maybe, and we transfer a lot of money using those tools. Anyway, sorry.
Yeah, so Bitcoin also offers sort of an extension of that, which maybe some people will be aware of, not all, in terms of multi-signature transactions. So to sign a transaction and make it valid, you have to sign it with your private key. But you can also say that a transaction needs to be signed by multiple people. So we currently require multiple people to go into the physical locations. But we're moving to a model where, as well as that, we won't be enough as Elliptic to actually move the money ourselves. We'll also need to be at least one trusted counterparty, whether that's a lawyer or an accountant or someone else.
Okay, we're going to take a question here in the middle from Mike.
Just to share a story with the rest of the group, you've given me a unique opportunity in my life, because when we formed in our group at the beginning, we were talking about it, and I said, oh, there's this really interesting company that's had this great idea, and James said, yes, it's us, which has never happened to me before. From a kind of trading perspective, I'm interested in the price and the arbitrage of some of these things. So, what's the price differential between a freshly minted Bitcoin and one that's been going around for a long time? And going back to what you guys are just talking about here, there's no such thing as sort of no security and absolute security. There's a whole sort of spectrum like this, or maybe it's exponential. What's the kind of price curve? I mean, you can talk about Elliptic or just in general for, if I want to secure Bitcoin, is that going to cost me 0.1%, 1%, 10%? If I want a really, 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 really secure one, what's the pricing here?
In terms of how you store it or how you...
How secure a Bitcoin is. If I just go and do it on my mobile phone now and I lose it and I forget my password, that's pretty unsecure. If I say, I'll go to Elliptic and, you'll take my Bitcoin.
So, I mean, you can store it for free on your phone or computer or whatever. You can store it for free with quite a few online services. There's a lot of retail services who are trying to offer it for free. We're very much pitched at enterprise, so it depends somewhat on who our customer is. We typically charge around 1%. That's sort of based on costs of insurance and so on, which not not many providers have at the moment. That's not a huge sum. No, I mean, it's more expensive than warehousing gold at the moment, but we think that that's because it's a new product for the insurance market, and we hope to drive that down over time.
Okay, last question just over here.
Hi. Assuming you've managed to tie up a public key to someone's identity, how easy or difficult is to track that person's transactions throughout the blockchain and eventually estimate all of his holdings and so on?
So some work has been done to try and group Bitcoin addresses into entities. So it's sort of a graph problem in terms of understanding where money is moving between different addresses. The thing is, if I tie my identity to one address, there's nothing to stop me going and creating another address and moving money to that. So there has been some academic work done on trying to link together all those addresses and say that's probably a person, that's probably a company, and then if you can then start identifying one of those specifically because I put one of my addresses on my website or...
Assume you did.
Yeah, then it gets easier to say, well, then he was interacting with this company. Maybe that was an exchange, or maybe a lot of people interact with that company, or maybe it's a merchant and that sort of thing. There's not anything too definitive out there yet, but there are a few papers on that which I could try and reference you to if you'd like. There you go. Additional mail.
Okay, James, thank you very much. Thank you.